Okay, got the recorder going. Let's get a whiteboard here. 4/30/19 McDonald's post-earnings audit. All right. So we bought the May 3rd, May 10th, 205 calendar call spread for 17 cents. Oh, that shouldn't be 417. That should be 17. Okay, right now, the stock is trading 198.5 and spread is trading about 24 cents. Okay. Our short still has 17 cents of premium. So here's what I look at. Okay, here's our spread. We know that the short, like William said, this is working for us right now. We know that this premium is going to go to zero by the end of the week in 3 days, 3.5 days. It's going to go to zero. Now, it's going to go to zero either because the stock is below 205 and the call becomes worthless, or it's going to go to zero because the stock has exploded and it's now in the money and it's just trading intrinsically with no extrinsic value or no theta decay. But it's going to go to zero. Okay? Everybody with me so far? Okay, so by the end of the week, this option will have zero premium left. So I look at this and say, okay, what has to happen? What has to happen to the stock in order for our long call, okay, in order for our long call not to lose more than what we know we're going to gain in the short call? Okay, does that think about that? Could be kind of confusing. What has to happen in the stock for our long option not to lose as much as what's in the short, the premium left in our short option? Okay, that's the way I'm looking at this. Okay, so what has to happen to the stock in order for our long option not to lose as much as the premium left in our short option? Okay? So yeah, the bottom line is 17 cents, right? That's our buffer zone. That's our buffer zone. So what has to happen to the stock? Well, right now, if we look from a delta standpoint, we're long 5 or 6 deltas. Okay? Okay, so let's put this up here. We are long 6 delta in the spread, meaning for every dollar the stock changes, we should theoretically make or lose 6 cents. Stock goes up, that's a good thing for us because we are long deltas. Stock goes down, that's not a good thing for us because we are short deltas. Okay? So, if the stock goes down approximately, let's just say if the stock goes down $2, our spread should decrease by roughly 12 cents. Okay, now, since we've started the discussion here, you're going to see that the value of the spread has already gone down. It's now trading only 19 or 20 cents. And that's because the stock is also down about 80 cents from where we started talking here. So you can see how that delta is now starting to affect the value of our spread. Okay, so if I go back here on the whiteboard, what would be a positive for our spread? What things could happen that would make the value of our spread go up here? And we've just kind of figured out, all right, to the downside, we kind of know where the break even is going to be or where we need to potentially get ourselves out of this. But what would make this a good thing to the upside? Anyone? What would make this a good thing to the upside? Okay, stock go higher, yep. Increase in IV, bingo. That's really the two things. Okay, so stock go up, and that's because we are long delta. Or if volatility goes up, we are long Vega. So those would be the two good things. Okay, again, on the downside, we've now calculated from a delta standpoint what could be a negative. We've also, just as I said, that if volatility goes up, that's a good thing. If volatility goes down, that's a negative for us. But this is really the way to look and dissect how our spread is going to work or not work, or dictate to us where do we need to potentially get out, pull the plug, or even raise an offer. Okay, so that's what we're looking at, and that's what I'm going to keep a close eye on, and that's, I have some alerts set out here. I certainly don't want to hold this thing beyond today. Okay, but that's how we evaluate this. Any questions on this breakdown here? Okay, let me get this video posted up here then. I'll get the whiteboard posted up here. We're going to dive into a lot to look at. Trent, you're welcome. Yep, spot is, Russell, it's trending down here. Spot's trending down. And then Rick, so we were able to exit half the position yesterday. Obviously you weren't. Stock is down quite a bit from there. It's trading about $1.20 now. I would probably still hang out, Rick. I wouldn't do anything. You know, if we go to exit the balance of our position at some point, that's when I would get out. Okay? All right, let me get this up in the room, guys. I'll be right back.